All right, 2024, that is a wrap. We're gonna look back to my 2024 real estate finance and predictions video, and we're gonna see what I got right, what was a meh, and what I was completely just flat wrong about. So my 2023 video was actually 80% accurate, and let's see how this one actually held up. Subscribe to the channel. We drop new videos each and every week, and comment anytime you see something where you're agreeing with me and you're nodding your head, or you think I am just dead wrong and I am off my rocker. My name is Mike Perna. I'm a Metro Detroit real estate agent, and I hope to earn your trust in your business in 2025. Scope out our over 3,000 five-star reviews on Google and Zillow, and book a time right on my calendar to talk about your next upcoming home purchase. All right, let's jump in. All right, so first I covered real estate, and let's see what I said and let's see what happened. Home sales, I believe, is going to ratchet up 20% to 4.8 million homes sold, and we're going to see a 5% increase in home values. All right, my first takeaway is I completely forgot about that vintage Tiger shirt. Should I bring that one back? Or I've got a couple of techno and EDM shirts because we are the home of techno. True story. Okay, well, home values and number of homes, I'm going to mark down as I nailed it. And most economists were actually dead wrong. While many economists had home sales down in the sub 4 million range nationally, my prediction was 4.8 million home sales, that we would have a little bit stronger of a market than what people think. And in fact, we ended up at 4.62 million home sales. So that stacks me up at 96.25% accurate. That number I will take. Now, on that 5% home value growth, I almost nailed that one too. Case-Shiller has values rising nationally at roughly 5.1% in 2024. And here in Metro Detroit, our home values went up 5.45%, beating the national average, which is pretty cool. Within 0.5%, I think is pretty darn good. And a 0.1% nationally. I mean, definitely not bad. Okay, so let's take a look back at what the experts at Bankrate, Yahoo Finance, and Barron said. Bankrate has us pegged at a 4.6 million home sales, which is a little more conservative. Yahoo Finance is reporting a price increase of only 3%, upward maybe 4%. And honestly, I think that's a little soft. On the far extreme, Barron's is forecasting home prices to actually decline 1.7%. And guys, that is so unlikely, it's not funny. All right, Bankrate and Yahoo Finance were actually not that far off. But Barron's, I mean, really? How fast did you retract that home value decline prediction? But it's too late. It's still here and will live forever in my video. Now, what the so-called experts did not take into account were the two causes and, of course, the corresponding effect of a couple of things on the market. Cause number one, over 75% of Americans still have interest rates at or below 4%, or a completely paid off home. Okay, boomer, I'm talking about you. And I've talked to a lot of families through the year that do want to make a move. They want to move up to the next house or move down, but it wasn't critical that they move up into the bigger home or downsize and are holding off because of how much more that next property would cost. For most people moving up, their monthly payments would literally over double. I'm included in that number. I would love to move, but I also love my payment more than I need to move. So that kept homes off the market. And with that tight inventory market, there wasn't a lot for buyers to choose from, causing some multiple offer situations throughout the year. Number two, the largest generation by sheer number of people are the millennials. Right now, that's between 28 and 43 years old. The average first-time home buyer right now is 38 years old in 2024. And with rents increasing with each renewal, millennials are looking at the market and the rental contract and deciding to opt for buying a home, which has kept demand high. So the lack of homes on the market and pressure from rents increasing are putting upward pressure on home prices, and I don't think that's going away anytime soon, guys. Okay, next up, interest rates. Oh boy, okay, I'm actually a little nervous to see what I said on this one. I'm sweating on this one for sure. Now, there are three scenarios that could play out in 2024. The first one is we could start the year flat and hold there for the first few months with interest rates, and then lower to 6.5 to 6.25 going into the election. Now, rates could take a sharper downturn to the 6 mark or 5.5 mark, but we'd have to start that rate decline very early spring so they don't come crashing down, ratcheting up inflation and overheating the economy too fast. Now, rates could stay steady, or we could lose our grip on inflation, which is completely possible, and rates could have to rise, especially if we have a very strong job market. My gut tells me the first scenario is the most likely. Okay, I was a bit afraid of where I was going there with the three scenarios. Drop a little, 3 rate drops, or drop a ton, or climb. Okay, well, both my predictions on this one actually played out and held true. Jerome Powell, the Fed chair, does beat to his own drum. He literally disregards presidents and Congress and pretty much anybody else that has an opinion. He doesn't really care. He's just going to do what he wants. That's Jerome Powell in a nutshell. And that's part of the reason why he's a powerful Fed chair. And he did, in fact, lower rates 3 times into the mid and sometimes low 6s, but definitely not the 5s or the 4s. People, myself included, we're hoping for. Okay, next up, new construction. And I'm sweating this one even more to see what I said. So most predictions by economists, including the National Association of Home Builders, Goldman Sachs, had all predicted that new family home construction would go down another 20%, just like from 2022 to 2023, with pretty much only the National Association of Realtors thinking it would be up, and even then, just a modest 4.7%. All right, let's take a look at what I said.
Both nationally and here in Michigan, I believe we're going to see a 15 to 20% spike in new homes.
Oh my God, did I really say new construction was going to go up 15 to 20% in 2024? Good job there, Mike. Okay, well, let's see the data. Cranes, where you at? Okay, well, Michigan, we are up 21% in Michigan, and nationwide, new construction was actually up 9%. All right, now what did I say on new construction pricing? I'm actually feeling pretty good about that one since I got the first one right.
But I believe the price of what's being built will come down dramatically.
Well, I was dead wrong on that, and I'm not afraid to admit it. While condos and townhomes did spike almost 40% this year, the average new construction home sales price started in 2024 at an average of $395,000, $395,075 to be exact, and then it ended the year not down like I predicted, but actually up at $419,838, with a high point in October of $439,051. Yeah, that's actually the opposite of what I thought. I guess just because we need lower income homes and we need middle of the road range homes doesn't mean that's what the market's going to give you. Oh well, on to the next. All right, stock market, or stonks as the meme goes. Okay, let's see what the experts said first.
For 2024, BCA Research is very bearish, thinking recession, and believes we're going to see 3,300 as an endpoint for the S&P 500. JP Morgan is still bearish, but a little higher. Their prediction is the S&P 500 is going to end around 4,200. Morgan Stanley is staying neutral at 4,500. Bank of America is seeing more of a bullish 5,000.
Oh yeah, all wrong. Every single one of them. Let's see what I said.
And Michael Perna is looking down the spike to 5,200. I'm coming in high, but then I was the only one that did in 2023 and nailed it.
Well, I sounded rather confident in my outlier prediction. All right, let's see where we're at on the last day of 2024. Whoa, 5,900. I hope you put as much as you could into the stock market this year. That's a 24.5% increase from the first day of 2024 to the last day of 2024. And I think I'm going to give myself the L on that one. Wow. That said, Morgan Housel, who wrote The Psychology of Money, was dead on that it's better to hold on to funds and ETFs and stocks long term and not try to time the market by selling high and buying low. I cautioned a lot of family members and a lot of friends and a lot of clients, and I even put it in that video, not to sell in 2022 and hold tight, even though 2022 was a rough year for the stock market, because in 2023, when the market rebounded, a lot of people got nervous that they should be holding their funds in cash accounts, like savings accounts, especially as many banks like Huntington, Bank of America, Ally, and others started paying 4.5% to 5.25%. I still cautioned people to hold and stay in the market through 2023 and 2024. Now, the ones that did stay in the market in 2024 saw a 19% greater return on average than the cash holders. If you stayed in, good on you. All right, next up, we're going to talk inflation, and there are some definitely bull predictions by me on inflation. Let's see how it stacked up, what the experts said, and then we'll talk about what happened.
Now, many economists think that we're actually going to go below 2.5%, and I honestly believe that's just a pipe dream. But after that, I think we're going to see high twos, not low twos like the Fed wants, but they're just going to have to swallow it and deal with it.
Okay, so the experts said we'd be below 2.5% inflation, and some even said we'd be below 2% inflation ending 2024. Now, like I said in the video, that pipe dream was exactly that, a pipe dream. But still, I nailed it. We did end up in the high twos as I predicted, with the corresponding rate drops. We finally broke the back of inflation, but it's still not that flat 2% number that we're looking for. I'm gonna put this one in the W category. What about wage growth? Where did I think it would go, and where did it go?
We're going to see wage growth, I believe, move more towards a 3 or 3.5% lower, still above inflation. There's no economist predicting wage growth to expand above 5%. There just isn't. And honestly, guys, I don't see it in the cards.
All right, so that one actually beat all predictions, including my own, and stayed in the 4s. 4% plus, that is a welcome number and a small reprieve. Very small, but still a reprieve for Americans. Now, that said, It's a very small reprieve. Every week going to the grocery store, filling up the gas tank, at the hardware store, prices are still super high and they're not coming down. Inflation is still in the positive, not the negative, but at least they aren't still at the crazy rates of 7, 8, 9% inflation. Things are certainly not getting any cheaper, but they're just not getting more expensive as fast, and specifically more slowly than wages are growing, and that's a positive. And that's just not a supply and demand issue. Remember when eggs spiked because of the bird flu and they got up to almost $5 per dozen on average? Well, after the egg inventories came back 4 months later, because it takes about 18 to 22 weeks for chickens to go from hatch to actually laying eggs, prices came back down, but they settled in about $3.75 per dozen, not the $3 per dozen it started out at. Because the number of eggs bought in any single month didn't significantly fall, companies kept the costs up because why not? They could. And hence their stocks skyrocketed with the added profits. Part of what's keeping pricing on everything high is definitely the supply chain and contractor and worker issues and shortages, but part of it is happening because of what's happening in the boardrooms that are beholden to their investors, not us. Okay, rant over. All right, crypto. My, that's a wild ride. Okay, let's see what I said.
My few bucks I put into Bitcoin did well. I'm gonna hold it through 2024. USA Today believes that we're gonna have a very bullish crypto year. I won't be there to see it. Just not a fan. Just personal opinion.
Okay, well, I'm glad I held on to my Bitcoin. I bought in about 19,000 and, well, to now, that's for sure, right? While I'm not adding to it, I'm actually gonna continue to hold it, I think. Luxury home sales. Okay, so luxury home sales did actually go down. They fell from 2022 to 2023. Scope out what I said here about what was gonna happen in 2024.
In 2022, we saw 1,590 luxury home sales here in Metro Detroit. In 2023, that number went down to 1,497, a little under 10% less. Mainly this was due to just less homes to buy, not for lack of demand. We saw builders pull back hard from the luxury market, and for someone to move from a $700,000 home to a $1.5 million home, it's a like to have, not a need to have. This thing has got to be compelling.
Okay, so quarter one, I was actually pretty nervous about this prediction, but in the middle of the year, luxury home sales actually took off. Scope out this news article from Inman News. Then in early December, Housing Wire reported a boom. And that boom was here in Michigan as well. But also, as predicted, luxury sales went up. Almost 500 more luxury home sales happened in Metro Detroit, moving that number from 1,497 in 2023 to 1,984 luxury home sales in 2024. Mark that down as nailed. All right, let's look at the next economic indicator, rents. All right, what I said.
We're going to be straight up even on rents in 2024. Not a lot of movement in the sector. We're going to end the year, I think, where we started.
So rents have remained pretty steady. Mid-year, I was sweating that one because rents actually spiked 4 to 5%, but they ended up coming back down and ended up being a wash by December. So looking at this report by apartment list, rent did in fact come down, but only 0.7% nationally. So here locally, we saw about the same. So some areas in Metro Detroit were up 1%, while some areas in Metro Detroit were down 1%. While I saw rentals in cities like Redford come down a bit, areas like Royal Oak ended the year about 1% up. All right, so now that we're at the end of things, how did I do? Okay, so I ended up beating every analyst out there, including Goldman Sachs, Barclays, Yahoo Finance, all of them. And I ended up getting 8 predictions right, but I also did get 2 predictions dead wrong, and I'm gonna own that. And one that was a push, so my final score is gonna be 8 out of 11 overall right, or about 72%. I'm gonna take that given the volatility of 2024, and frankly, all the other guys, none of them got over 40% right. None of their predictions were over 40% right, so I'll take the almost double for the win. So my 2025 prediction videos is about to drop on all things real estate, finance, and beyond. Don't forget to subscribe, and I will see you on the next video.